Joe LaVorgna, who's chief economist with Natixis. Welcome to you both. Joe, just to build on this discussion, let's show your household wealth chart, which shows that we passed the previous bubbles and we're heading, ever higher. What does that tell you about the shape the economy's in?
It tells me that we're very asset price sensitive. Steve is correct. Historically, the stock market's not been a very good predictor of recessions. The Fed has been abominably worse. However, with financial assets so high as a share of income, Kelly, any downside in equities poses significant risk to growth. That's what worries me.
So you think it might be unsustainable. Heather, what do you think?
I think the key to watch is the consumer. And right now they look very good. Wages are growing, which is a great sign. But certainly that consumer confidence data that we saw yesterday was very alarming, particularly that sentiment about what the economy is going to be like in 6 months. Usually what's driving that is feelings about the job market. So I think it will be key to watch that job market data going forward.
Joe, are you bearish? Do you think we're going into a recession?
I'm real worried about one. The answer is no, but this depends a lot on what the Fed does. This Fed balance sheet unwind, these rate hikes, this obliviousness to what's happening in the rest of the world and the fact that inflation's low is a problem. So if the Fed continues on its current path, we'll be in a recession by 2020.
Joe,
I'm hopeful at some point they will, hold on, Steve, I am hopeful at some point the Fed will relent and do the right thing and let this economy run hot.
Joe, what impact, if any, do you see from the tax cuts next year? I've found it really interesting that many of the people who were big proponents of the tax cuts and believe it's a gift that will keep giving into future years are the ones arguing the Fed should stop right now because the economy is too weak to withstand it. What do you see happening from the tax cuts next year?
I like the corporate side, Steve, very much. I always did. We'll know in 5 to 10 years whether it was good policy. The answer is we don't know. I don't like what they did on the individual side. Too much of the economy is on the coast where you've got the real estate market that's going to get hurt significantly if it hasn't already by SALT. I think it was done haphazardly. So we'll see.
Does it matter? I'm curious, Steve, maybe you have an answer to this, that it seems like corporations did spend most of their tax windfall on buybacks. Does that sort of alter how you filter that through to the economy? And we're reading about Apple buying $63 billion worth of stock and losing $9 billion in the trade.
There's a lot of inconclusive research about the macro effects of buybacks. I think it's not negative. I think for sure it's not as impactful as if they went out and bought new plants and machinery or broke ground on new plants. What it is it's putting money into existing assets. It's why, by the way, previous benefits to the corporate taxes were done for only new investment, so that you didn't reward old investors. Because one of the negatives of that is, let's say you got a guy that was kind of on the fence or a company on the fence, you've rewarded them and you've maybe kept them in business when they wouldn't be in business or that. So there's a lot of stuff about that. It's good because anything that raises stock prices ends up reducing the cost of building new plant, but it's not the same as building new plant.
Heather, Joe just mentioned the obliviousness of the Fed. What is the view in Washington and at the White House? We've heard the administration now reiterating that they have 100% confidence in Fed Chair Powell. Do you think that's true?
I think the key that we're going to look back in a year from now at this week and all the volatility is that the president himself never came out to quash those rumors and reports in the Washington Post and elsewhere that he would like to fire Fed Chair Powell. And it seems like this whole debate between Trump and Powell is shaping up a lot like trade a year ago, where you have some of the same people in the White House, same top aides like Secretary Mnuchin, who are backing Powell, sort of doing what the market would like. And then you have another contingent that would like to see Powell forced out or like to see more pressure on Powell. And as we know, what happened in 2018, the side that ultimately won was the side that wanted those tariffs and wanted more aggressive trade policy.